In this episode, I want to talk about financial planning and analysis. And I believe in my heart that this is going to go a long way to help small businesses and medium-sized businesses. Because if you don't understand financial planning and analysis, then you won't be able to understand the strategic implications, and that is why I want to take my time to really touch on it so that you can understand it and understand the risk and reward, the risk of not doing so and the reward for doing so. So what is financial planning analysis? Financial plan analysis is simply a process of budgeting, analyzing, forecasting the financial data which can help you to align your financial goals or your financial objectives and also to support your strategic business decision, and this is why your financial analysis is so important. And you need to plan your finances or your financial objectives, and you need to forecast it as well. How much do you need to sell? How much service do you need to give in order to realize certain levels of revenue at the end of the month, at the end of the day, and at the end of the year? And you need to report those. You need to have a reporting system, so that you can track performance over time. In addition to that, you also need to analyze those figures. While you're analyzing that, to be able to identify the risks that are embedded or inherent in your operations or in your business. Because without you understanding the risks that are inherent or embedded in your operation, I can guarantee you sooner than later, something's going to strike you and you end up losing everything that you've spent years and years to build. So therefore, what I'm trying to say is that first, you need to determine your current financial situation. How much level of liquidity do you need to have in order for you to operate efficiently? You must define that, Then once you've defined that, then you go a step further. You will develop a financial goal. What do I want to achieve at the end of the month? Put the amount in dollars or in pounds, put it in figures. Don't be so vague and say, I want maybe 500,000, 2 million, 20 million, 100 million. You have to put a figure and be specific about that goal and why it's so important for you to achieve that goal, that financial goal. Then identify the alternatives. What are the alternatives? Which alternatives do you have in terms of courses of action that you need to take, in case of that goal, in case you fall short of that goal, in case you're unable to realize that financial objective or financial goal that you've set. What are the alternatives? And then you have to evaluate or consider or assess, and that is where analysis comes in. You have to understand what has gone wrong, what is happening here, to which direction is the trend moving. You have to be able to identify different product lines, service lines, able to understand cost drivers, revenue drivers, and once you're able to identify those, then you'll be able to pinpoint your risks and begin to say, okay, these are my risks. And how do I? Because we say in finance, cash is king. Cash is king. If you're in business and you're not having any cash, I'm sorry, you're not in business yet, because you need money to operate. You need money to buy inventories. You need money to pay for services. And you need money to pay your staffs. You need money to expand. You need money to invest. So cash is king. And by doing this financial plan analysis helps you to identify where your cash are coming from or where they are going, and able to build around them to see, okay, these are my cost drivers. What are the cost of action do I have here? How do I reduce these cost drivers that are really, making me to spend a lot of money at the end of the month or at the end of the day or whatever. And these are my revenue drivers that really bring me money in, but yet the cash I'm collecting is not equating to my my expense at the end of the month, to my cost drivers. So how do I strike that balance to make sure I don't go into liquidation or bankruptcy? Because I heard from a very respected man. He once said that there are two rules to investment. First, everything that you do, don't lose money. And rule number two is for you to remember rule number one. And it is that simple. It is that straightforward. It is that, it's not a rocket science, but you need to understand this. And you need to understand as well how to implement your financial plan, year on year, and monitor those results. Do comparison, because by the time you do month to month comparison, you can do all this stuff on a spreadsheet, but spreadsheet is tedious and consumes a lot of time, But if you're a wizard, and if you know yourself, if you know your ways around spreadsheet, it can be very, very good. The good news is that there are a lot of softwares out there that can really help you. Financial plan analysis softwares that you can just install into your systems, install in your machine, on your laptop or whatever, even in your iPhone or your Samsung or whatever smartphone that you have. And all you do is press a button, or 2 or 3 clicks, they run these reports for you. Job done. Now with the future, let's deal with the past. Now you also need to understand your accounting reconciliations. You need to understand your tax provision, your tax implications on your cash flow and on your cash forecast. And then you also have to understand the present. And the present has to do with the regulatory reporting frameworks, the financial reportings, your management dashboards, and variance analysis. That is your present. Variance analysis is something that I touched before, when you get to analyze your forecast, analyze your result, analyze your product lines to understand how they're impacting your strategy and how they're impacting your cash flow and your cash position, because you want to understand your cash position, because cash is king in everything that you do. Cash is king. Without it, you cannot operate effectively and efficiently. And if you don't have an effective control mechanism or process or procedures in place, sooner than later, you will be out of business. That's for sure. So financial plan analysis is so important because it deals with the present, it deals with the past, and it deals with the future. And that is how you can effectively control your business and become profitable.